Live from the Business RadioX studio inside Renaissance Bank, the bank that specializes in understanding you. It's time for North Fulton Business Radio.
And hello, everyone. Welcome to another edition of North Fulton Business Radio. I'm John Ray, and we are not quite back in our studio inside Renaissance Bank on Windward Parkway in Alpharetta, but guess what? We're 2 weeks away, so we actually know that we're coming back. As we do this show here in late March, April 12th is when we'll be back in the studio, and we're looking forward to that date. We may have been interrupted in terms of our studio work inside Renaissance, but Renaissance has kept it going in terms of working with the small business owners that they work with, and they've been doing a great job. And I know this personally from me and the clients that I work with in terms of what they do and how they do it with small business owners. Now, if you like 1-800 numbers, if you like automated computer voices and not being able to talk to a live person, then don't go to Renaissance. But if you want that, my suggestion is go to renaissancebank.com, find their local office, some 200 across the South, ready to serve you, and call them, make an appointment, go in and see them, sit across the desk from them, and do it the old-fashioned way, yet they've got the services that you'll need for just about anything they can you can throw at them, they can handle, because they're big enough to be able to do that as well. So check them out. I think you'll be glad you did. Renaissance Bank, understanding you, member FDIC. And now I want to welcome Michael Horwitz. Michael's an old friend of the shows and has been on with us before, and it's a good time to have him back. He's with Transworld Business Advisors. Michael, welcome.
Thank you, John.
Yeah, great to have you back. Before we get into it, several things we want to chat with you about, but why don't you give folks an overview of you and how you're serving the market out there? Great.
Thank you, John.
Sure.
Transworld Business Advisors is an M&A advisory business broker agency. And M&A, mergers and acquisitions, I help people buy and sell small to lower middle market companies. So those are companies, Main Street companies with revenues of $500,000 or more, up to about $15 million a year. And most of what we do is work with sellers to best position their business to get the best price for their business in today's market.
That is a important task in today's world, because there's a lot going on there. So, I mean, let's get straight into it. You know, what is the market right now for business sales and acquisitions? What does that look like now that we're 12 months into a pandemic?
It's still a cautionary tale. Sellers are wary. Buyers want bargains. And so the market, I mean, let's face it, in April, a year ago, I stopped being busy, completely stopped being busy. I didn't start getting busy again until August. And what happened was things became more clear. The stimulus CARES Act kicked in, and people started to get a little bit more open about it, and certain things about loans were made much more friendly to owners and acquirers of businesses. So activity started picking up, but sellers, especially those who are affected by COVID, if their business is COVID impacted, really just want to wait and see what it all means. The non-COVID impacted businesses, especially those who are considered essential, look at home services, tree care, landscaping. Those businesses actually did very, very well. I just helped an owner sell a business. They're a specialty contractor, and they install wine cellars, saunas, and steam rooms. And they had a banner 2020 because people were home. They wanted to do more things with their home, and their revenues were up. So it really depends on, the nature of the business. The guys who were cash strapped to begin with struggled mightily. if they're even around still.
Mm-hmm.
If you're in an okay cash position and could weather the COVID months, not a bad place to be. My expectation is, and it's still a very soft market for M&A transactions, both in the middle market and lower and small markets. It's across the board. Private equity firms are still holding on to their trillions, and but the good news is, and we'll talk a little bit more about it, is there are some loan programs now out in the market that are making it very attractive for a buyer. Should compel sellers to think more seriously about getting into the market today.
Yeah, I want to get into that, but let's stop for a second in about the reason for the softness. Is it how much of it has to do with sellers' expectations being out of whack? Given the reality of today's situation versus potential buyers just holding back. I mean, what's the interplay between those two factors?
They are happening in parallel. As I mentioned, buyers want a deal. They want to scoop up stuff at a discount. Sellers don't want to sell at a discount.
Sure.
So there's that tension. COVID impacted businesses. Let me give you an example. I'm working now with a company that does screen printing and embroidery. Lovely company. They've been around for 35 years, year-over-year profitability. Their main customers are schools and churches and institutions and businesses. It's primarily events-based. Now, there have been no events.
Mm-hmm.
I had done a valuation of them at $650,000. That was our asking price. And it was a solid valuation. At the height of the pandemic, there was an interested buyer. And when a business is put in front of a lender for funding, the lender goes out and has a appraisal done, a third-party independent appraisal. They don't take my number at face value. They go get a third party to do it. The third party gave them a 35% haircut. The business in 2019 was worth $650. They said that in 2020, the business is worth $430 because of COVID. And, these guys, they want to sell, but they shouldn't be punished after 35 years and take a haircut like that because of something that's going to turn around.
Mm-hmm.
We don't know when, right? But we know it's going to, and already is. We're starting to see lots of positive signs in the market. And I think what's going to happen with business sales and acquisitions is they're going to lag a little bit behind some of the good things we're seeing. And I'll give you an example. I've talked to any number of private wealth advisors because I have them work with my clients. The clients are going to have to deal with a liquidity event. And what do they do with the money? So I work with personal financial planners all the time. And they say that the people who have money stayed still in most of 2019 and 2020. But that now they're like, all right, let's make some money with our money. Let's quit sitting on things and get some movement forward. I think that's a strong leading indicator that we're coming into a recovery, that people are looking to make money with their own money. I think the next step is they'll start to look at acquisitions and mergers.
And are they that's an interesting observation. Are they, those investors, are they looking at business ownership as an alternative to maybe a stock market that some say is at stratospheric levels, or what does that look like?
Well, it depends a lot on who's doing the buying. So there are several different kinds of buyers.
Mm-hmm.
In the smaller and lower middle market, there are income buyers. And basically, that's a person who is buying himself a job, right? He's looking at the cash flow and looking at the business and saying, how much can I put in my pocket every year? And how much do I have to pay for that? Mm-hmm. And often, it may be somebody who's had her corporate run. She's in her 50s. She's saved up. Corporate America is no longer attractive to either party, perhaps. And, it's time to do something more that you're more passionate about. So the vast majority of buyers that I work with fit in that income buyer category. The next is a strategic buyer. And there are two kinds of strategic buyers. One is a current business owner who wants to expand his book of business. All right. So he's run his business. He's spending his marketing dollars. He's stretching the ROI on marketing and been growing organically. Now, how does he double his book of business overnight? You go buy another business. And so he's willing to pay a premium potentially to get a business that has a lot of the attributes that he's looking for, that he can acquire and assimilate into his current business. There's that kind of strategic buyer. And then there's more the institutional strategic buyer. Those take the form more of family funds and private equity funds. Those are the guys who are definitely looking at, the bond and equity market versus the business market, and saying, where can I make some strategic investments where I'm going to get a return on my investment in whatever their horizon is, 3 to 5 years, build it and grow and go. So there's that whole market that's looking for those kinds of businesses that has also been relatively quiet. It's not like M&A stopped in 2020, but everybody certainly got on the sidelines for a time.
Folks, we're chatting with Michael Horwitz. Michael is a M&A advisor with Transworld Business Advisors here in Atlanta. Speaking of expectations and valuations being out of whack, let's turn it over and talk about, you mentioned home services, you mentioned some of the business segments that have done extraordinarily well. Are sellers' expectations out of whack there, given that it looks like they've had kind of I won't call it an artificially great year, but certainly extraordinary circumstances?
So I guess one of the ways to start answering their question is sellers' expectations are always out of whack, good, bad, or indifferent times. And I don't mean to be mean, but the fact is, if you're a business owner, generally that's your baby. You've been doing it for a long time. It doesn't have any warts. Your buddies all claim they got millions and millions of dollars for their businesses. Why shouldn't yours be the same? So the rule, more than the exception, is I walk into a client and reset his or her expectations as to what the business is really worth based on market conditions. Now, a business only sells to somebody who's willing to sell it for that amount of money, and a buyer is willing to buy it for that amount of money. So if a seller, let's say he's done very, very well through the pandemic, if he suddenly thinks his business is worth 2 more times, right, because of COVID, a rational buyer is going to come along and say, no, sir, it's not. That was an exceptional year. Let's look at prior year's performance. And you start to take a look at 2, 3, 4 years back, and you see that indeed it was a bubble. It was a pop, right? So I don't have to set and reset seller expectations. The market does it, right? So if the seller says, I want to put my business up for $750,000, I'm like, okay, I'll do it. Let's see what the market says. But Mr. Business Owner, I think your business is worth $500,000. But let's put it up for $750,000. So what you've effectively done is you've put a house on the market in a $500,000 neighborhood, and you're asking $750,000 for it. What happens? It sits there. And so eventually 6 months go by, 9 months go by. The owner is claiming I haven't done anything for him. And I'm like, Mr. Owner, the fact of the matter is you're overpriced. And the market has told us that. I've had inquiries on the business, and everybody has told me this, Mr. Business Broker, your client's business is really worth $500,000. So the market takes care of those things.
Yeah, certainly I can see that. But you're somewhat of an amateur. Well, you're not an amateur, but you're not paid. Maybe a better way to say it. You're not ostensibly paid to be a counselor or a psychologist, but you kind of are, right?
I am, yes. I mean, look, the reality on selling a business is it's probably more emotional than it is rational and businesslike. It's very hard to, and I've owned my own business. You've owned your own business. Mm-hmm. They become very close and dear, right? And and there's family involved and all sorts of things. So yeah, I'm often a counselor. I'm an intermediary. I'm in between everybody. So when you look at a buyer and a seller for a business, the buyer has his attorney, the seller has his attorney, CPAs, personal wealth advisors, all sorts of people who are trusted advisors to both parties, telling them all sorts of things. And they may have been told one thing, they may have heard another, right? So it often gets very convoluted with what people are thinking. And I try to get them to put their business hat on and just think with their right brain, but the left brain is a strong brain. And, my job is to try to manage everybody's expectations to get to the closing table. I don't make any money until a business is sold. I don't ask for a retainer up front. I do all of the heavy lifting up front, the valuations, the marketing, writing up confidential memoranda in order to get them to prospective buyers. There's quite a bit of heavy lifting. I don't ask for a dime for that. And the fact of the matter is finding a qualified buyer is about 25% of my job. The remaining 75% is getting to the closing table. So here's a not fun fact. 80% of businesses listed for sale, small and middle market, don't sell. Our close rate at Transworld, our agency, we're very proud. We're at about 40% close rate. So even 60% of my clients, their businesses don't sell. Lots of reasons for that. But the fact of the matter is it's not like a house where eventually it's going to sell, right? It may not be updated, but somebody's going to look at it and say, I see the potential. I'm willing to put some money into it. I'll buy that house. Businesses aren't like that. Buyers have all sorts of different options out there and can go look at all sorts of different businesses. They're listed on the internet, thousands of them. So my job, that remaining 75%, is to get through the process, and it involves banks and lawyers and accountants and all sorts of nefarious types. It's a challenge, and that's my real job, is to get the parties at the table and signing the documents.
So, Michael, you. Yes, I mean you're a counselor, a psychologist, but you bring a special perspective on this because, as you mentioned, you were a business owner, and not all business brokers have been business owners. So I think we can say that, right? So, yeah, talk about how that experience informs how you work with clients today.
Sure. Thank you. Yeah. I mean, from an education standpoint, I went and got my executive MBA back in the last century. So I have that. I've worked for corporate America too, both at Fortune 500. I came to Atlanta here. Bell South recruited me. And so I've got P&L in my background at corporate level, as well as I've had venture capital backed high-tech experience, where been with a couple of, especially during the .com era, and we happily spent lots of other people's money. But again, P&L responsibility, board level responsibility. And then, right down to owning my own bicycle shop in Alpharetta for 7 years. And that was a gas. It kept me off the streets. I didn't make any money at it, but it was a gas. But again, that's where you really live your very own P&L.
Mm.
It's that combination of experiences of corporate, startup, solopreneur. I can really feel for, and I purchased that bike shop, so I've been through the purchase on myself.
Mm-hmm.
So I've got different levels of experience, and I can talk to a small business owner, and I can talk to a business owner who owns a $40, $50, $100 million business. I understand the tugs and pulls of those environments.
So, Michael, let's talk about that business owner that's thinking about selling. When should they start a conversation with you about sale of their business?
The answer to that is 5 years ago. If you're planning to exit your business, the best thing that you can do for yourself is start the exit planning process at least 5 years out. You're not going anywhere, but there are so many. One of the reasons that 80% of businesses don't sell is they're not sellable because they haven't been prepared and staged for sale. So 5 years out, I'm not the guy to talk to. I will recommend a value builder expert, somebody who's in the marketplace. We've got really top talent here in Atlanta who will look at a business and start to take a look at what needs to happen to go from a concern that is looking for growth at the top line, right, and grow earnings, to a business that's really looking to make their earnings as great as possible in order to make the valuation as great as possible. That doesn't happen overnight. If you give yourself the luxury of that time, you're going to come out with a much better result. So let's just say the way businesses are evaluated, they're done by multipliers of EBITDA.
Mm-hmm.
Let's just pick a multiplier of 4. So for every dollar you increase your EBITDA, the sales price increases by $4. Right?
Mm-hmm.
So, and if the owner is the business, as so often happens, right? All of the institution knowledge is up in her head. If she can work to delegate and create some other authorities in the business, how much more attractive to a buyer is that? If they've been doing everything, and most owners do, to minimize tax exposure, that doesn't necessarily maximize earnings. You have to shift your focus, being an owner, to I'm going to get the best tax bang for my buck the way I do my books, versus I'm going to get the best exit dollar amount the way I do my books. There's all sorts of other attributes to a business, how you do your HR, your documentation, so many other things, your risk assessments, your risk planning. All of those can be worked on to make a business so much more attractive that's going to actually raise the multiplier and raise the value of the business. 2 years at a minimum. Now, does that happen? No. Most phone calls I get are, I want to sell my business. All right, sir. Let's take a look at what you got.
Mm-hmm.
And away we go.
Right. And just to be clear, and let's go back to that point you made earlier, you get paid on the sale of the business, the actual sale of the business, not everything that kind of happens up to that point.
That's correct.
And so that really puts you in a position where you're really incented to get somebody to that table to sign the papers if it makes sense, if the deal makes sense.
Absolutely. And, I represent, let's say it's my business owner client, and I'm his or her agent, especially when I'm looking for buyers, right? And starting the initial discussions that get us to a letter of intent or a draft asset purchase agreement. Once those documents are signed, in effect, the business is under contract. Now, it's conditional, right? It's not a binding agreement. So it's conditional on positive outcome of due diligence, that the buyer can actually get funding, and that things go smoothly, if you will, that we can get to the transaction table. But in truth, because of the way I'm incented, I want the transaction to happen. So I really become a transaction agent. And I want to do everything I can to help the buyer. And so I introduce them to attorneys. I introduce them to lenders. I introduce them to financial planners. Everything I can do to make a buyer feel more confident about the risk he's taking. And let's face it, he's taking risk. Anything I can do to make the seller more confident. Because the fact of the matter is very few deals are cash deals. There's always several components which have greater risk to the seller. I've got to make everybody comfortable that this is a good deal, that this is a win-win-win. If not, the deal doesn't happen, I get nothing.
Now, Michael, we teased everyone earlier talking about some specific incentives that folks have with lending programs. Yeah. So let's get into that and talk about how that could be advantageous, not just to sellers, but buyers.
Sure. And we're talking here mostly about SBA lenders and SBA loans. Most of the clients that I work with, and SBA will lend up to $5 million, more actually, they'll go 10. So it can be a pretty decent sized company that can qualify for an SBA loan. Now, SBA versus a conventional loan. An SBA 7A loan for the acquisition of a business is a 10-year loan at prime plus. Conventional loans are generally much shorter at generally a little bit higher interest rate. So SBA loans on the face of them are attractive because you've got longer to pay and lower interest. The SBA will also, so let's just stick with that for an acquisition or an expansion loan. Pre-COVID, the government guaranteed 75% of that SBA loan to the lender. So if the loan got defaulted on, the lender, say it's Renaissance, they do SBA lending, the lender is made 75% whole. Right now, because of COVID, there was the CARES 1, CARES 2 now. SBA lenders are being covered at 95% of the loan value. So they're a little less risk averse, right? The government's backing them up at 95%. The other thing that's happening is whoever takes out a 7A loan between now and September gets 5 months of free money. The SBA pays for 5 months of your loan for the first 5 months. It's not deferred. They pay for it.
Wow.
And they're also waiving fees that go along with the loan. That can be anywhere on a modest loan from $3,000 to $4,000 to $5,000 up to tens of thousands of dollars on a significant loan that the buyer is not paying out as cash on top of his equity injection. So buyers should be really incentivized to go ahead and look at those loans. Sellers should feel more confident that buyers are going to come with money and more of a willingness to take those loans because of the attractive terms. And so between now and September, it's a great time to look for an SBA loan.
And this may seem obvious, but sometimes it's good to state what the obvious is to make sure that folks get it. But when it's good for the buyers, and it makes it easier for the buyer to get the deal done, that's good for sellers and the valuation, right?
That's exactly correct. That's exactly correct. So, and the government has done this deliberately, right? That's to stimulate this market.
Mm-hmm.
And to get back to some kind of steady state. It'll never be what it was pre-COVID. It'll be something else as a steady state. But like everything else the government's been doing on top, 1.9 trillion is not a trivial amount of money. This is all to, get things going. And what a great way, and this is one of the things that's happening at the SBA. And, the other thing that they're doing is the PPP loans to keep people afloat so that they don't have to close shop. It's all good right now from a stimulus standpoint.
Good words here. Good help, folks, from Michael Horwitz. Michael, this has been great. And it sounds though we could go on, but, we got to get to the important question, which is really for those that want to be in touch, tell them how they can do that, because everyone's situation is different and they need to have a conversation with you. So tell them what your coordinates are.
Absolutely. Love to. Transworld Business Advisors of Atlanta. My cell phone is 678-427-1163. And my email address is mhorwitz, HORWITZ, at tworld, all one word, .com. mhorwitz at tworld.com.
Michael Horwitz, Transworld Business Advisors here in Atlanta. Michael, thanks so much for being with us.
My pleasure, John. Thank you.
Thank you. Folks, just a quick reminder that if you need to be working, well, let's just say you need to get out of parts of your business that you're spending too much time on, like Michael alluded earlier, if you're working on administrative tasks or bookkeeping or that kind of activity, then you probably need to go talk to Essie Escobedo over at Office Angels. 770-442-9246 is her phone number. I suggest you just give her a call and explain what your issues are, what your bottlenecks in your business like that. And here's what will happen. She will send in, get an angel from her team and send them in, and they will fly in, get the job done, and fly out. And they will do this on an ongoing or as needed basis. And I recommend them because I use Office Angels. They do a terrific job. Essie and her team have been around for 21 years and have won a lot of awards, and they've won them for real good reason because they do a great job. So give her a call, 770-442-9246. Let her know I sent you, or go to officeangels.us for more information. And folks, just a quick reminder that you can find the show on all the major podcast apps. North Fulton Business Radio is the search term. We would love it if you would go on your favorite app, give us a 5-star review. I'm asking that boldly for one simple reason. It's not about me. It's not about Business RadioX. It's about our guest. We want people to find the show so they can find great business leaders like Michael and possibly utilize their services. So if you could help us and our guest out in that way, that would be terrific. And we would love to connect with you on social media. North Fulton BRX is the platform term or name, what have you, for LinkedIn, Facebook, Twitter, and Instagram, and maybe one or two other social media platforms I don't even know about, so who knows. But we'd love to connect with you there as well. So for my guest, Michael Horwitz, I'm John Ray. Join us next time here on North Fulton Business Radio.